So today I'm going to be going over a trade recap video from today, May 12th. I'm going to kind of walk you through my process. That's the goal of this video, is I want to show you my thought process behind this trade that I took today. It eventually went for 70% profits, but there was a lot of key components that went into my thought process and the planning behind this trade that eventually did yield some really good profits for us. All right, so the trade was next week calls. So the expiration date was May 20th or 5/20 expiration. OXY 60 strike calls. Okay, and this was actually a day trade for us, even though we used next week expiration. Okay, and there's a couple reasons for that. One is because they were monthlies. Okay, so 5/20 expiration, those are May monthlies. Those monthly options is where there's going to be the most volume, the most open interest, and they're going to have the most liquidity. So if for some reason we need to get out of this trade really hurry or in a really fast manner, okay, say Oxy starts to tank, or we want to exit for really nice profits really fast, okay, and we need to hit that bid really quick when we exit, okay, monthly options provide the most liquidity. They're going to be the easiest ones to sell for profit or for a loss, because that's where there's going to be the most volume and the most traders. Okay, so the goal of this video, to walk you through my thought process. The beginning of my thought process for this trade, it started in pre-market. Okay, I noticed in pre-market this morning, and I posted the chart to my team before open. Forward/CL, which is light crude oil futures, was actually trading inside a bull flag in pre-market. Okay, so a bull flag, that's a bullish continuation pattern to the upside. Now let me show you forward/CL's daily candle yesterday. Okay, yesterday's daily candle for forward/CL was a monster bullish engulfing candle. Pretty decent volume on it overall. If we're going to see bulls continue to the upside after a really strong day yesterday, they need to put price into a continuation pattern. Well, that's exactly what we got overnight. And this was a healthy technical pullback because this bull flag came overnight. So they flagged price overnight and into pre-market. That is a healthy technical pullback that oil traders did for oil. And it was looking like at some point this morning, obviously I didn't know when, but it looked like oil was poised to break out at some point in the first half of the day. And that was only because of this bull flag that price gave us overnight. So I posted that to my team. And if we see oil is bull flagging, we obviously want to look at oil stocks to the upside. And Oxy has turned into one of my favorite stocks to trade in the last few weeks and last couple months. My team and I have been trading it up and down. We've been really, really good at it. I think we've only had one or two losing trades and many, many winning trades trading Oxy, and this was one of those winners. So to kick off my thought process and what went into this 70% return for a day trade was forward/CL crude oil futures were bull flagging into open. That was step one. Okay, if we're going to go long on oil stocks, it helps us a lot if oil is matching our bullish momentum. Okay, if we're looking at calls, we want oil to be bullish. Okay, it's going to be harder, but never impossible, for us to go long and for oil stocks to see upside and to see continuation to the upside if oil is selling off or if oil is bearish. Okay, so it's just a nice confluence to have together if we're looking to go long on oil stocks, and that is what we got this morning. So, fun fact, we were actually in an Oxy swing overnight, and it actually turned out to be a loss. We sold right when the price broke $59 because that means that Oxy was now trading below the daily 21 EMA. That was the big technical support that held yesterday. It broke that right here within the first 5 minutes. And I told my team, all right, I'm exiting now. It's below technical support. It is what it is. Okay. Don't panic. It's just a loss. We can always make our money back as we know it in the market. The market, it's a never-ending flow of opportunities. We just have to be on the lookout for when that next opportunity might come. So I still kept watching Oxy. The market had a really bearish open. That's why I think Oxy sold off at open. It was because SPY, the NASDAQ, the Dow Jones, they all sold off at open. If you watched oil's open, let me rephrase that. If you watched forward/CL at market open, it wasn't necessarily a weak open like SPY had. Okay, so that told me oil was still strong. Oil pretty much held its own against SPY. Okay, that tells me right there oil is pretty strong. There's buyers, there's momentum in oil. There's some market makers keeping oil up. They're not letting oil go lower. Well, that's a part of the equation to go long on an oil stock like Oxy. Okay, so I kept watching Oxy and I kept watching Oxy. Oxy continues moving down. At this point, Oxy opens at $68. It's now trading below $58. So we're now $2 in the red. That's a fairly overextended move to the downside for Oxy. Okay, Oxy, it's like a mid-cap stock. It used to be a small-cap stock. It's now a mid-cap stock. Its moves can become overextended to the upside or downside and actually throughout the whole year, really, once Oxy started gaining a lot of popularity and a lot of momentum with the big oil boom and the big oil rally that we saw in January and February. Okay, so Oxy has gained a lot of attention. It's become really popular. Well, it's prone to overextension on the upside and the downside. Well, this was one of the days where Oxy became a little bit overextended to the downside, and that's when Oxy started trading below $57.50. Okay, notice what happens when Oxy gets below $58. The selling volume starts to die down a little bit. Okay, we get this one big red candle right here, or this one big volume bar here, but notice after that the selling volume starts to die down. So at this point, I see selling volume dying down as Oxy is a little bit overextended to the downside. Let me start looking for a possible reversal, because while Oxy is selling off like it did at open, oil remained the same. Oil did not reverse with Oxy. If oil remains strong, unless equities have a really, really bad day, which means SPY, the NASDAQ, and the Dow Jones, Oxy is eventually going to bottom out. And that's what I started thinking. And so I started looking at, okay, well, where is Oxy trading at? Is Oxy close to a reversal? That's exactly what we ended up getting. Look at this demand zone that Oxy had formed on the 1 hour time frame. Okay, this was a recent new demand zone. It's not very big. We just got it earlier this week on May 9th. Okay, that's when it started, and it held through earnings, which was also a big positive to see. Basically, Oxy had fallen into the floor of this demand zone. $57 was the bottom of this demand zone. If $57 broke, Oxy was definitely going to print 56, and if it broke 56, it was going to fall all the way down to $54. But oil remained strong. That's what was sticking out to me. Oxy showed weakness, but oil remained strong. So here's what's going on inside my thought process. Okay, oil remains strong. Oxy is following SPY's weakness. What happens if SPY reverses? And that's exactly what we got. SPY started to reverse to the upside. Oil remained strong. And now let me pivot to oil again. Oil actually broke out of this bull flag this morning. Okay, the 9 a.m. hour, oil breaks out, and it continues to the upside during the 10 a.m. hour, making a very solid move. This was a classic breakout of the bull flag, and it looks like oil ended up stalling out around 107 before reversing and pulling back down a little bit. Okay, oil broke out of the bull flag while Oxy found a bottom in the 1 hour demand zone. Okay, so now once SPY starts to reverse, once oil starts to break out to the upside, I knew Oxy was going to reverse to some degree. I don't know how much it was going to reverse, but I knew Oxy was going to reverse to some degree because it had become overextended to the downside. Okay, at the very least, it was just going to be short covering that came into Oxy, and that would still provide my upside move that I needed to go long. So at this point, once I know what I'm looking for with Oxy, now it's down to price action confirming my entry. Is price action going to confirm my long entry? And it did. Right here, a bullish engulfing, barely engulfing, but it is a bullish engulfing 5-minute candle with volume. But look where this bullish engulfing candle came. It came right at the floor or the bottom of this demand zone, just above $57. Okay, this was a bullish confluence. We have a bullish buy signal essentially with the engulfing candle with volume. That's high probability in of itself. But look where this candle formed, right in this demand zone. That is about as high probability as a long setup as you can get. Okay, if this trade was to reverse, okay, I entered calls, and I told my team that I entered calls right here when this candle closed. At the very least, if this trade reverses right here at $57.60, and I sell for a loss of $57, that's going to be a small loss. That's a 60-cent move to the downside. Okay, that loss will be managed. It would be a small loss. It would be mitigated. It wouldn't completely ruin our day. Okay, it would be a manageable loss. It wouldn't be huge. Okay, and that's what we want to do as traders. We want to manage our losses and we want to keep them small versus our winners. We want our we want our winners to be a lot bigger than our losses, and that's exactly what we got today. So Oxy gives the long signal right here. That's all I need to see. Without thinking twice, boom, I'm in. I bought next week calls. The reason I went next week, and today's a Thursday, so I could have done weeklies without worrying about theta being super high like they are on 0 day till expiration. The reason I went with next week's is one, because of volume on this option. They're going to be May monthly, so I know there's going to be a lot of volume, a lot of open interest, and a lot of traders trading them. So I know if I have to exit for loss or for profit, I won't have any issue doing so. Okay? The second reason is because Oxy bounced in a demand zone. Okay? There wasn't going to be strong resistance except at $60, which I'm going to get to in a minute. But if Oxy reversed here in demand and it never reversed lower, there is an area of value, borderline supply zone up here at $62. So Oxy is essentially trading, and it's still trading in between this zone as of this recording, between $57 as the floor and $62 as the supply zone. Okay, I think I might have said I meant $57 here if I just misspoke. My bad about that. Okay, so this was the long entry that I was looking for, and without thinking twice, I entered. Now, pivot to the bigger time frames here. I'm going to pivot to the 15-minute time frame here, okay? 15-minute time frame shows buyers stepped up in demand. That's a bullish 15-minute candle. That's exactly what we want to see. Now, look at this 15-minute candle right here that I'm going to circle, okay? This 15-minute candle is very, very important. Okay, this 15-minute candle drops back down into demand. Price drops back down into demand with a lot of volume. It closed as a red candle. So I understand your point of view and you're thinking if you think it's a bearish candle. But look at the entirety of this candle. Look at the long lower wick. It bounced to a T off of 57.50, which is the top of this demand zone. Buyers were there at demand and they reaffirmed this demand zone as support. Buyers stepped in again, and that was the confirmation I needed to stay in this trade. Once I saw this form, I knew there was no reason to exit this trade because buyers stepped in at demand again for the second time. They stepped back in and they bought the dip, making a higher low intraday at that point, and that's exactly what I needed to go long or to stay in my long position. Okay, that was all the conviction that I needed to stay in this trade, and I let Oxy and I let the market makers do what they wanted to do with it, and I was just going to sit back and enjoy the ride because I caught the bottom essentially with that 5-minute bullish engulfing candle in demand. Okay, this was the trend line that I needed Oxy to break out of, and I told my team that. I posted this chart and I was like, look, if Oxy's going to see continuation to the upside, it needs to break this trend line. You can see it struggled a little bit right here, but eventually it did. Okay, so from the very bottoms, we caught a bottom at $57 when oil broke out of that bull flag. Remember, I showed you started breaking out at 9 a.m. and that breakout went into 11 a.m. before oil stalled at 107. Look where Oxy follows oil to a T. We caught the bottom with price falling into demand zone, and we caught the oil breakout as Oxy played catch up with the bullish momentum in oil. And it also helped a lot that SPY also started to reverse right here as well. I think SPY briefly on the day was trading green, but we can see right now ES is down 50 points in the red. So there is still a lot of bearish momentum in the market today. But that's all we needed. This was a quick and easy day trade. We were smart about our entry, We waited for the price action to confirm a long signal, which was that bullish engulfing 5-minute candle. That was our entry confirmed. Now let me flip it back to the 5-minute time frame and I'll show you how we knew our exit. Okay, we see the struggle right here at the 5 or at this trend line, but boom, Oxy breaks out. Okay, Oxy breaks out with pretty decent volume, but overall on the day, notice volume right here is pretty low for Oxy. Okay, we now come into $60. $60, our calls are in the money. However, this is a psych resistance. It's a big psychological level because it ends in a 0. This is a key level, and I told my team, look, Oxy might top out here because it's a psych resistance that price lost this morning. Okay, we opened at $60, rejected, sold off. Okay, this was on a retest right here. Turns out sellers were still sitting there. Notice on this big green candle, the volume bar is pretty small but decent still. Okay, it's small, but it is fairly decent. We'll look at the next 5-minute candle. This confirms your exit right here. At this point in time, you should have exited this trade for profit, and this is how you let price action confirm your exit. Notice that we now have a double top here on the 5-minute at $60. We'll look at the volume. It's an overall bearish candle with quite a bit of volume. Okay, that's selling volume at this point. It's no longer buying volume. This is market makers and intraday riders who hopped on probably right here on this retest of 57.50 in this demand zone. They're now selling out for profit. Okay, this is how you let price action confirm your exit right here, because the selling volume either matches or it eclipses the buying volume. Okay, as we can see right here, the selling volume easily eclipses the buying volume that price saw right here. And once you see that selling volume, look what OXY ended up doing. It made a lower low 10 minutes later. Okay, so now OXY has reversed. We are out of this trade, but this was a 70% return trade. A lot of my members took profits on the way up from 30%. I think one of my members even said their position went 100%. That might have been a weekly option though. That went 100%. Okay, but this was my thought process behind OXY. Okay, I didn't let the losing swing overnight impact my analysis. Okay, I didn't let fear take over my thought process. Okay, I was looking for that next opportunity that the market would give me, and I was waiting patiently for it. And what did I do? I waited for price action to confirm my entry. If you wait for price action to confirm your entry, and it's going to be a high probability entry, you can sit back and let the market do what it wants. That's all I had to do here for OXY. I just sat back and I let OXY do its own thing. I knew oil was in my favor and SPY was rebounding in my favor as well. Okay, that's all I needed to do as far as a trader goes. Once I was in, I just sat back and enjoyed the ride. And I took profit at a very key spot. Okay, 70% profit. That's a really, really good return on a day trade. You would be foolish to let that turn red. And there was no way in the world I was going to let a 70% green trade turn red on me. Okay, at this point in time, this same trade, I don't have the option up on my phone next to me, but this same trade, it's probably green, but it's probably down to 10, 15, maybe 20% profits. Maybe. It's probably still green overall because, again, my entry came down here, so we're still a decent bit of ways away from that, but market sentiment is clearly not in your favor anymore. Okay, there's no rhyme or reason to still be holding a 70% bag as of now. Okay, ES is making new lows on the day. Oil from topping out at 107, it's now down $1.50, and it's now red on the day as well. Okay, this is why you see profit, take profit in these volatile market conditions, because it can reverse on a dime on you. And above all else, you just want to focus on being green and taking what the market gives you and moving on to the next trade. Okay, with all this being said, I hope you learned something from this video. I hope I was able to provide insight into my thought process for you. There was a lot of moving parts that went into this trade between oil, SPY, and watching OXY itself and managing my emotions, because again, we held an OXY swing overnight into this morning. We sold for a 30% loss. But this green trade, this winning trade, easily eclipsed that. Okay? Percent profit, it was a 30% loss, I think, if I remember correctly. This trade alone was a 70% win. But as far as dollars go as well, the amount of money that we lost on the swing overnight, this day trade easily made that back and then some, and it put us green on the day. All right, so with all that being said, if you have any questions about this video, about my thought process, or anything that I said during this video, feel free to shoot me a DM on Instagram, StockTwits, or Discord. I will be more than happy to answer any questions that you might have.